Welcome back. Time now for Money Manager. In the studio with me is someone who doesn't really manage money, but it's a money story, and he is a manager. It's Scott Picken, who is the CEO and founder of Wealth Migrate. It's a property story, and a fascinating one, I think, as well. And let's get over to Scott to see exactly what it is. It's crowdfunding. It's like an Uber thing. We've interviewed you before, but you were in Joburg, so now I can see you, the whites of your eyes. It's like a property app, almost.
Yeah, look, Lindsay, in simple terms, a lot of people try and confuse things, but actually in really simple terms, it's the internet just coming to the space. The internet has come to the taxi space, it's come to the music space, it's come to the publishing space, and at every single time, it cuts out the middleman, it reduces costs, and it increases accessibility. And it's no different in the real estate space.
Okay, so tell us how it works for an ignoramus like me.
Well, in simple terms, I'm going to use the Uber analogy. In the old days, I wanted to catch a taxi, I would phone up someone, I would go to a call center, there'd be a whole lot of people working in the middle office, they'd get hold of a taxi driver. For me as the person, I would still pretty much have the same ride. My taxi would still arrive and take me from A to B, but the cost structure has reduced by at least 30 to 50% by taking out the middleman and putting me directly in contact with the taxi driver.
Gosh, I wish the financial services industry would cut out the middleman, because then the cost would be lower. Maybe in the future. Sorry, I digress. On you go.
Well, exactly, and that's actually the point, is that if you take the average property investment, most astute property investors are looking for a return of about 20%, IRR of 20%. Yet most investors are getting somewhere from 6 to 8%. You've got to ask yourself where the other 12% is going, and it is all the middlemen costs. That's the bottom line. The beauty with technology is that you can cut those out in exactly the same way as Uber and reduce the cost by 30, 40, 50%. So in simple terms, what crowdfunding is it's helping individuals invest in direct property through the internet, through technology, and cut out all the middlemen in the process. Exactly the same as Uber, just in the technology, in the real estate space.
You still haven't told me exactly what you do.
In simple terms, I help people invest in direct property in the best quality opportunities around the world with the best quality partners.
Commercial or residential or industrial, what?
Both.
Okay.
So it depends on the different countries. Different countries have different attributes that we focus on. So we tend to focus on different sectors in different countries. It tends to be weighted probably 70% commercial, 30% residential.
Give me an example, and let's start with commercial, if you would.
So one of our real strongholds is medical. One of my business partner and chairman, Henny Besaidnout, he's been in medical since 1992. So in America, as an example, what we're doing is we're buying up medical portfolios. They tend to be on campus around major hospitals, long-term leases with government or blue-listed tenants. And you're looking at portfolios in the region of $15 to $30 million. We specifically like them because it takes an equity investment of between $1 million to $10 million, which takes us out of the moms and pops at the bottom end, and it's below the big funds and REITs. So it's a beautiful sweet spot where we're accumulating assets in that space.
So you don't want the big boys and you don't want the moms and pops, as you said, who've got maybe 10,000 Rand or something like that. You want somewhere in the middle, people that are serious about investing. They've got a portfolio already in equities and bonds and cash, but they want to have a property as well.
Look, the bottom line is that most people are actually looking, there's some funds research that's come out recently, that in terms of alternative investments, money managers that are investing 10 billion US dollars or more are looking to put 30% of their allocation now into alternatives, of which real estate is 10%. And yet the average investor is not being given that opportunity. At the moment, they're only looking at equities or bonds. So now they're looking at real estate, and they're not just looking locally, they want to look locally and internationally, but they don't have access to it. And so what this is providing is access to good opportunities and good partners in specific sectors.
Okay, let's talk about London, for example, now. I mean, if you're a South African investor, you can take, essentially exchange controls are gone. So you have to use your overseas allowance, and then what happens then? If you say, I want to be involved in London suburban residential property development, what happens? What do I have to do?
Well, it's interesting you mentioned London residential, because personally right now I own a number of properties in London. I lived there for 9 years. Personally, I wouldn't touch London residential right now. I think it's really overvalued. I think that there's a massive supply problem coming online. I could go into much more detail if you want.
No, it's fun. This is a good story, because this is almost a proxy for what's happening in the equity markets and the bond markets at the moment. Maybe property is going to be the next one, because London is a massive bubble to me.
Look, in simple terms, what most people don't understand is that investing is just common sense. And so if it's having the most development and the most supply it's ever had before, if interest rates are the lowest they've ever been in 350 years, if most people that are buying are foreigners, and if the locals can't afford to buy the property, when interest rates rise, and they will, I'm not an economist, but it's kind of common sense.
They will, yeah.
then the foreigners will want to stop buying and will want to stop owning because it's going to cost them money. The locals can't afford to buy them at the prices they're at, and there's only one way that prices will go. We've seen it happen in Cyprus, we've seen it happen in Dubai, and it's common sense. Now, if you take a 10-year view, do I think London's a good investment? Yes. Am I selling my London properties I've got? No. But buying right now off-plan developments from London residential developers, in my opinion, is you might as well go to the casino and bet red or black. However, though, that doesn't mean London's a bad investment. It is still a safe haven. But as an example, what we're doing is we're looking at commercial properties, specifically in the London area, actually convenience stores. So it's a major trend. People now go shopping 8 times a week in London, literally walk-in shops. So just like in South Africa, you've got the Woolworths, etc. What we do is we're actually buying up pubs. We renovate the pubs. We sign 15-year leases with the likes of Tesco's or the cooperatives.
You're buying pubs?
Buying pubs, yeah. Because pubs are going out of business.
Pubs are going out of business. I was going to say, I mean, I think the statistic was around about 10 to 15 pubs per week, maybe even more, closing just in the London area.
So, Lindsay, you and I both lived in London. Where are the pubs positioned? They're the best locations. They're right in the centre of town. They're right next to the tube stations and everything else.
Who owns them? Isn't it the brewers that own them? And there's a landlord as a system in the UK. So the brewer owns the pub. There's a landlord put in, gets a salary, etc. He's a corporate employee. What's the situation now?
So there's 3 things that have happened in the pub market. Firstly, the whole drink and drive thing has literally meant that people don't go to the pub every night like they used to. Secondly, people now, the younger crowd particularly, want to go to retro pubs and not these old stuffy English pubs. So the older premises are going. And the third one is actually coming down to the brewers. A lot of them majorly overcapitalized and actually went bankrupt in the last 6 years. And so you've got a lot of pubs that actually exactly what you said. You've got an owner that owns the property. The pub manager is not making enough money to pay a high enough rent. And so as a property owner, you want to exit the property. And we can come in and use that real estate asset with a far better usage.
But you're not going to use it as a pub, of course. You're going to develop into a couple of apartments.
Convenience store. Convenience store, so a Tesco's or a Waitrose, where people can walk out the tube, walk straight into their Tesco's, get their shopping for the night, as in literally their dinner, and walk home. And you know, it's not as understood here in South Africa because we all drive cars, other than maybe the Woolworths that's at the garage that everyone stops by.
So the hypermarket in the UK, which was prevalent in the 1970s and early 1980s, these big superstores outside of towns in the UK where people would go and get their month's shopping in one go, that's all finished now. You get off the tube or you get out of the taxi or whatever it is, the bus, and you buy something and you eat what you've bought every single night. So you're, as you say, 7-8 times a week.
Look, if you look at anything, and you know, my generation and younger than me, it's all about convenience. You know, we don't have the nous to go shopping on a Sunday and shop for 2 hours and buy everything. It's much easier to just walk home, buy your ready-made meal, put it in the microwave, eat it. And that's why the stats are the average British person goes to the shops 8 times a week.
Wow.
So we just fulfilling that. So in the same way with the medical, people are getting older in the Western world. It's kind of common sense you want to be in the medical space. This is another trend. Again, real estate investing is common sense. Just look for long-term trends and then put yourself in front of them. It's not rocket science.
I've gone off at a tangent again, talking about pubs and convenience stores in my hometown, London. So someone wants to get involved in what you've just said, in other words, buying pubs and converting them to convenience stores. What do we do? What's the process?
So in simple terms, we've got an online investment platform. So Joe Soap goes onto our platform, wealthmigrate.com. Yeah. They register. They put in their unique needs and wants. So your needs and wants might be different from my needs and wants. And then through the platform, they can actually invest internationally in multiple projects. There's 3 countries that we focus on at the moment: Australia, the UK, and America. We've been in those markets for a long time. We've done over $1.34 billion investment in those 3 markets. And so what we're doing is working with partners that we've already got. But in simple terms, for Joe Soap, the person wanting to invest, everything is on your digital platform. You can manage everything like you can manage your Uber taxi from your cell phone.
Okay, so I give you £1 million, and what are you going to do with it? Again, I need to get back to basics here because people won't understand what you're talking about, the platforms. What am I investing in?
So in simple terms, Lindsay, you're not giving me $1 million. You're going, it's like the same way that you go on Amazon or eBay. You find something that you like, you invest directly in that product. So if you've got a Seesaw convenience store in London, and let's just say it's a £2 million investment, and you put in $1 million, I'm going to keep it simple and say that's £50,000.
Right.
You know, that's what's that, 0.5%, or, you know, so literally you're going to own 0.5% of that building. You're going to own the equity, you're going to own the cash flow and the income. It's no different to if you and I bought a property together. I put 50% and you put 50% and we own it 50-50.
What sort of yield are you talking about here? I mean, you're focusing on the consumer society worldwide, and you're focusing on Australia, the UK and America, which are consumer-driven economies. Yeah, obviously, there's going to be a little bit of a blip soon because interest rates are going to rise, but this is what you're focusing on, health and convenience stores, by the sounds of it.
Look, not only, you know, in the US there was a real opportunity in the residential market. We got a hell of undervalued assets that we were able to accumulate. In Australia we're doing student accommodation. So it gets a little bit more complicated in terms of each sector. But coming back to your returns, we like to look for projects with an internal rate of return of 20% plus, and we like to look for cash on cash returns of 8% plus.
How successful are you, and who is investing with you? Who is coming to wealthmigrate.com?
So look, over the last 11 years, we've actually helped over 2,300 South Africans invest internationally. So we've got quite a plethora of people. But it's really interesting. You've got everyone from, you know, Joe Soap that's investing $10,000 right through to very, very successful South Africans that are investing a couple of $1 million personally themselves.
Yes.
So, and the spectrum in between. So we tend to find that it's ideally, it tends to be entrepreneurs that understand real estate that are looking to get wealth preservation by investing offshore.
How big are you? That's the question I want. You say you're buying up pubs here and there, but that's a sort of, it's not a glib statement, but it's a statement that doesn't really tell me the facts. How much money are you investing? And do you get the money first from people and then invest, or do you invest with your own money first and then sell it off to people?
No, so it's definitely not the second one, because that's the whole syndication model where I buy it for 100 and sell it to you for 1,000.
Yes.
So no, it's direct property investment. The online platform is a marketplace. We don't do everything ourselves. We've got partners. Our whole model is built on partnership. In the same way I was telling you a little bit earlier, our name is Wealth Migrate. It's based on the principle of the birds flying together. So a bird flying in a flock can fly 70% further than a bird flying on its own. And the 20th century has been all about the person up the front trying to do everything themselves and fight with everyone else. And the 21st century is about collaboration and cooperation. So in simple terms, I'm not in London buying up on the ground, buying the pub myself. I've got a partner that's been doing it for 20 years. I partner with them, and what I do through the marketplace, what we do through Wealth Migrate, is we facilitate the investor meeting with a quality partner with a quality opportunity, and they invest directly in the opportunity.
Can this model be applied to anything else? I mean, this is property, and it obviously lends itself to property, and the Uber example was a good one. But anything else that can be done? I mean, are you having a look at any other sectors of the economy? Look,
crowdfunding is exploding all over the world. It literally went to $10 billion just this year. A lot of people would have heard of Kickstarter, which actually, if you're not aware of, it funded 42% of all startups in America last year. Just one website in America last year. So this is something that's extrapolating across many different sectors. We've chosen to focus on the real estate sector. Interesting enough, there's been 3 times more investment in real estate crowdfunding than any other crowdfunding in the last 12 months. It actually just tipped $1 billion, and it's expected to be $250 billion by 2020, to put it in perspective. It's also our domain space. So I'm a big believer that it's all about expertise. It's one thing understanding the technology, which is really something that we're good at, but you've also got to understand real estate. And you spoke about the market being a bit frothy around the world. The problem is if you've just got technology people that don't understand real estate, the market will change. We all know that. And the real value here is people with experience that know how to manage when the market's on a downturn. I've got a great business partner that said even a turkey can fly in a hurricane. We're in a hurricane right now. Really, I mean, you could almost buy anything and it tends to go up at the moment. But that will change. We're all old enough to know that. And it's what you do on the downturn. And that's the beauty from a crowdfunding perspective. And you know what I often say to people, to come back to your question, is that if you look at the dot-com boom bust of the 99-2000, everyone said the internet was over. It wasn't over. What it got rid of was all the kind of wannabes and the eBays, the Amazons, the Facebooks, came through in the long run. The same thing will happen in crowdfunding. But it's going to happen in insurance, it's going to happen in medical aids, it's going to happen in banking. It is going to revolutionize finance and investment as we know it today.
Scott, thanks very much for your time this evening. That's Scott Picken, who's the CEO and founder of Wealth Migrate. And if you look at this book that I've got here, it's called Property Going Global, written by Scott Picken. Have a look at it. It's an interesting concept. That's it for Money Manager.